Well, on the surface, the plus of 2.5% is very strong, much in excess of the consensus. However, if you adjust the data for the very volatile big ticket orders, then there is no longer a plus of 2.5%, but a minus of 0.4%. Therefore, in terms of the core category, manufacturing orders in Germany are still declining. And this is also true when you look at the ifo business climate. The ifo business climate is down. Manufacturing PMI is down until July. And what is even more worrying is that the service sector ifo, the service sector PMI, they show first signs of weakness. And this means that the domestic economy in Germany obviously started to follow downwards the export-led sector, which suffers for more than a year.
Now, we've heard from several corporates, Joerg, over the last few weeks around their cost-cutting and their job-cutting plans in Germany. I can think of BASF, Siemens, some of the major industrial giants are being forced to cut jobs to try to improve profitability in this downturn. What does this drop in employment mean for the economic outlook in Germany?
Well, you do not yet see a drop in overall employment figures in Germany. However, what you see is that the increase in jobs has declined and unemployment is no longer falling. Therefore, there are first signs that the 1.5 years weakness in the export sectors started to negatively affect the labor market. Therefore, I expect after a shrinkage of second quarter German GDP, I can imagine that even in the third quarter we might see a slight decline in GDP.
Joerg, what's the read across then for tomorrow's production data?
Well, the trend in the manufacturing orders is clearly down. And therefore, we expect also production figures to decline next month. And this is likely to be the result of tomorrow's release on German industrial production for the month of June.
Is there any way that we can look at this data at the mid-year and put a slightly less negative gloss on it? If we, for example, take a look at inventory levels, perhaps, and the issue of seasonal restocking, is there any way that we could frame this in a way that explains it other than in broader weakness that is setting in and indicating a more troubling period for Germany into 2020?
Well, I would hope you're right, but we already have the July surveys indicators, the ifo and the PMI, and they are clearly down, especially in core manufacturing. And when you look at China, there are no signs of the much hoped for upswing in China. Therefore, I think it is not yet through. And the latest news from the German car industry is also particularly weak.
So what are the expectations then over at Commerzbank with regard to action by the federal government to stimulate? Because we know that the ECB is setting itself up for further stimulus through the rest of this year. We had that message very clearly from Mario Draghi at the last meeting. But as you know, a lot of people are looking at the German government and waiting for evidence that the German government is also going to react to some of this weakness. But where are they? They seem to be missing in action at this point. So what are you looking for?
Well, the German economy is a kind of split economy. You have the export sector, the manufacturing sector, who's massively, who's in a kind of recession, I have to say. And you have the domestic economy, especially the construction sector, which is booming. You can hardly find any craftsman in Germany. Therefore, a kind of a public spending program, which normally goes through the construction industry, does not make any sense, because capacity utilization in the construction industry in Germany is extremely high. And therefore, I do not expect the German government to implement any economic stimulus program.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.